All right, in this video, I'm going to share how to buy rental properties using credit cards and how to get most of, if not all of your cash out of the deal. Most people don't even know this strategy exists, and even when I have shared it, I've shared it on LinkedIn before, I've shared it on Instagram. When I posted it on LinkedIn, people got very, very angry because they don't think it's possible and they think I'm running some kind of illegal thing. But this is completely legal, and I'm going to show you exactly how this process works. I'm going to have separate videos that go more into the details. This will be more of a high-level strategy on how this entire process works. So this is how to buy rental properties using credit cards and get most of, if not all of your cash out of the deal. If you have any questions, comments, or anything related to this, let me know in the comments and I can create more specific videos around those topics. So first thing that we're going to do is you're going to want to make sure you have a 700 plus, ideally 750 plus personal credit score. Okay. Now, everything we do here is going to be on the business side, but when you first start this process for getting approved for credit cards, they're going to look at your personal credit score to determine if they're going to give you a credit limit, and especially a high credit limit. So we've actually seen people get 25K up to 200K in a credit limit. And I'll share why that is exciting in this video. So you want to first make sure that your personal credit score is 700 plus. If you want to see more about how to increase your personal credit score, let me know in the comments and I'll have some other videos around that. But I'm going to assume that you already have a 700 plus personal credit score. What you're going to do then is you're going to start an LLC. And this is that will house all of your rental properties. This is for liability issues, so you don't want to put it under your personal name because if anything happens with your rental, they can go and look at your personal assets. So we don't want any of that. We're going to start an LLC that will house all of your rental properties. So, I mean, there's many different ways you can do this. You could set up like trusts. You could set up multiple LLCs. I like to keep it simple to start until I've proven that I'm actually going to take it seriously. So you could just start with one LLC. And when you are creating this, okay, when you create this LLC, I like to do it in the state where I am buying rentals. Okay, so most of my portfolio is in Ohio, and I have an Ohio LLC that anytime I buy an Ohio property, it goes under that LLC. Okay, now when you're creating this LLC, you also want to make sure that you do not name it anything real estate related or any high risk industry. Okay, high risk industry. And the reason why is because the banks, when they look at your LLC, they have like automated checks and they also have human checks. And if it looks like it's in a high risk industry, they're going to flag you and they're not going to give you as much credit limit, if anything at all. So you want to make sure that you name it something else, like consulting or marketing, advising or something. So you could use like your last name and like, consulting or advising, or you could just do like, Smith LLC or like Smith Ventures, like that. This is what I've done. You could do like your initials, right? So Smith, let's just say John Anthony Smith Ventures. So it doesn't really matter what the name is. You can always create a DBA later. I haven't really bothered with it on the rental side, but name it something that is not high risk, and you want to categorize it as something like property management or marketing, consulting, and advising or advertising are pretty safe industries to choose. Okay, or service based. You don't want to put it into like real estate development or rentals or anything about that. Otherwise, it will get flagged. So once you do that, you're going to start an LLC that will house all of your rental properties. When you create this, do it in the state where you're buying rentals, and then also name it something that is not high risk. So we're going to assume that you've done this. And again, if you want to see videos on these particular steps, then let me know and I may create those videos. Now, what you're going to do from here is this will change over time, okay? And I can have a separate video that talks about the sequence that you can apply in. but you're going to go to Google and you're just going to type in 0% interest business credit cards. Okay. So a few of my favorite, I love Chase. That's where most of my accounts are. And most of my biggest credit limits are. Amex, US Bank, Wells Fargo. There's also a bunch of like smaller banks that you can look at that offer 0% interest business credit cards. And so let's just take a look at what Google is telling us right now. So let's see if any of these look familiar. Inc. Business Cash. Yep, this looks familiar. This is what you're looking for. 0% intro APR on purchases for 12 months. Now, what this means is you can, let's say you get approved for $25,000. Well, you can then put $25,000 or up to the $25,000 on the card, and you don't have to pay back the entire balance, and there's no interest penalty for 12 months in this case. Okay. Now, you still have to pay a minimum payment every month, and that's typically 1% of the balance. So in that case, it would be $250 a month, but that is going towards paying down your principal because there's no interest. So there is still the 1% minimum payment. You're going to have to make sure that you can cover that, but you can still use that as free money, as other people's money that you can use for 12 months with no interest. Okay, there's no fee on the money that you use. You're probably looking at this and thinking, well, how can I use a credit card to buy a house? It's not possible. Well, let's just say you're going to go. I'm going to add this step. Google 0% interest business credit cards. And a few of my favorite, I'll just mention them: Chase, Amex, US Bank, Wells Fargo. Now, there's a particular way that you want to apply for these and the things that you need to put on it. It's also good to work with a relationship manager at the bank, but typically what you need to do is you open a business checking at the banks that have 0% interest cards. You fund the account. So depending on the bank, it might be like $3,000, $5,000. You often will get bonuses as well if you fund a certain amount, but sometimes it can also be the minimum. So it's going to depend on the different banks. So I'm not going to go too deep into that right now. So you're going to fund the account, and this might lead to some bonuses, right? Lead to sign-up bonuses for points and rewards. And then once you open the business checking and you've funded it, let it season for, I just do like 2 to 4 weeks. I'm not sure if that's the best. This is just what I've done. And I've gotten on a new LLC, just recently I got $148,000. New LLC, no revenue at all, and 0% interest business credit. Okay. And it was across these 4 banks here. Or actually it was these 3. So I'm actually applying for one more at Wells Fargo right now, and we'll see what we can get. So we're going to get it funded. We're going to let it season. Do some transactions between like the accounts, so like pay for things, just so it looks like you are using the account. And the reason we're doing this is because we're trying to create a relationship with the bank, because that's going to increase our chances of getting approved for a higher credit limit. So once you've done that, then you can apply for 0% interest cards, credit cards. The banks you open checking at. Okay. Now, this is also going to take, to get approval, it's going to take, let's just say 2 weeks on average. And then once you hear back, again, we've seen anywhere from 25K is like on the low end if you're applying for all these. That's typically if you just go straight to the bank, you don't know what you're doing, and you just hope and pray and see what you get. So usually we're in the $50,000 to $100,000 range most commonly. Now, I'm not a credit expert. This is just what has worked for me, and I've seen it work for other people as well. So you're going to apply for 0% interest business credit cards. I should keep clarifying that. You don't want to do personal, business credit cards. And this way it doesn't pull back to your personal credit score and ding you there. It's going to be on the business side. Now, the business credit cards still do look at your personal side to determine how much they're going to give you, especially on a new LLC. But we have seen most commonly 50K to 100K. And this can be even on new LLCs. Now, what you're going to do from there is, and I'll have a separate video on finding properties. I already have a couple on my channel, so you can check those out. But you're going to find a let's just call it distressed property. To buy cheap. Rehab. Rent out to Section 8 tenant. And then refinance. Now, this is called the BRRRR strategy. So this is buy, renovate, rent, refi, repeat. The thing that we do different here is we, instead of just renting it out to a normal tenant, which in this case you might get a normal tenant, let's just say $1,000 a month. Section 8 would get $1,400 to $1,600. Okay, sometimes higher depending on the zip code. So you get a lot higher rents, which means that the deal makes a lot more sense. You're going to cash flow. You can get into it cheap. You fix it up and you rent it out to a Section 8 tenant. Lenders like the cash flow. So like a DSCR lender will look at the potential or the current cash flow of the property, and they're going to lend to you based on that. So if the numbers don't make sense, they're not going to give you money. And that's why Section 8 tenants are great. And so we're going to find these BRRRR deals, and this is how you get your money out. Okay, this is a deal that I've broken down on my channel a few times, but I bought a deal. Let's just do example deal. I bought one for $43K, and it was a $21K rehab. So it was $64K all in. This is my capital in the deal. Okay. Then what I did was before I found this deal, I knew the ARV, which is after repair value, is it was 80 to 110K. Now this is good because I know that I can get 75% of the ARV during a refi. Okay, so when I'm looking for these deals, the numbers have to make sense, and I have a little calculator to make sure. So when I'm looking at this, basically the process was, I know this zip code makes sense for a BRRRR deal, and this is in the Ohio market. So I found this deal, the 43K purchase. I sent it over to my contractor. He was like, yeah, this is going to be about 15 to 25K depending on what we find when we break open the walls, but that's what you're looking at. We were right in the middle of that at 21K. So I'm 64K all into the deal. Now, I purchased this in cash, but here's where credit comes in. If you want to buy a house on credit, let's say you are approved for 50K in credit limit. What you can do now is you go to a platform like Plastiq. Okay, and this is Plastiq right here. You can check it out. There are other platforms just like this, so I like to sign up for all of them and just try to use whichever one works. But basically the way that this works is you can convert your credit card limit into cash, and you could use that to purchase a property in full. In this case, if I get approved for $50,000, I can buy the house in full with cash because it's 43K, obviously. Now, these platforms charge a one-time fee, and right now I believe it's 2.9%. So if I send $100,000, let's say, using this platform, if I get approved for $100,000 in credit card limit and I use Plastiq to convert it into cash to buy a deal, I'm going to be charged a one-time fee of $2,900. However, you might be thinking that, oh, that's a lot of money, thousands of dollars. Well, yeah, but you just got access to capital, $100,000 that you would have had to come out of pocket for with your own cash, and you wouldn't have been able to get this deal. So that's a small price to pay, and it's a one-time fee, meaning it's not a loan that you're paying daily, weekly, monthly for years. It's just a one-time fee to use the service. So that's a pretty fair fee if you ask me. So we go back here, you can buy a house on credit. because you can either use that credit card limit to buy a house in cash, or you could use it to say, let's say in this case, you're going to do 20% down. Well, you could do, let's just say 10K, right? It's going to be 10K and you get approved for 50K in credit card limit. Well, you can convert 10K of the credit limit to pay for the down payment of the home and the closing costs. And you could also use it to fund the rehab. Okay, you could put the rest on the card to fund the rehab. So you can use the credit limit as cash using these new age platforms like Plastiq. There's another one that I've used called Melio. And there's a few more. I can't remember the name right now. There's like 2 others that I've used before. But if you just Google like convert credit limit into cash, there's more of these tools that are popping up. So this is really, really cool because, it's completely legal. That's what these platforms are designed to do, is to convert credit limit into cash so that you can use it to build businesses and do things like this. And it's completely legal. So what we've done is, in this example deal, we have purchased the house using credit, right? If we got approved for 50K, we can purchase it outright, and then we could put the rest on a credit card and come out of pocket with their own cash. Now, here is how you get your cash out. After I did this rehab, which took about 2.5 weeks or so, we placed a tenant, and I knew what the Section 8 tenants would get paid based on the government site and the county site. So place a tenant, $1,468 a month. And I knew this because it's on the county site where I bought based on the zip code. And so I didn't have to guess what we were going to get. I already knew that this would be in the ballpark of what we could get. And luckily, we got on the high end, which is $1,468 a month. So you can imagine that the mortgage on a 43K purchase is not much, right? So I haven't refinanced yet. This is all in cash. But what we can do now is we place a tenant, a Section 8 tenant, paying higher than market rent, which is $1,468 a month. We got into this deal for $64,000. And now what we're going to do is refinance. It's called a cash out refi. So what happened here was, I talked to a lender, and I can make these introductions to you if you're a client, and they send an appraiser out. Lender gives 75% of new value, ARV. So this particular home appraised at 90K, which means 75%, we got 67,500 back, okay? So what happens there is I pay off my cash in the deal, 64,000. So we take this, let's just say 2,000 minus 2,000 for closing costs. So we're 65,500 minus 64,000. And we have, or let's just say 65,000 here. And so we're $1,000 positive because I got all of my cash back based on the refinance and the new value that it got appraised at. And I can pay back. If I bought this on credit card, I can use the loan proceeds here. Use this paid back credit cards. Used to fund the deal. Okay? So now we actually have money left over. And the cool thing about this is, even though all of my cash is out of the deal, it's infinite ROI because no money left in deal, and it still generates, it's like $560 or something a month in profit. I think it's actually higher. I think it's in the 600 range. So I'm getting $500 to $600, let's say, every single month. Let's just say 650. I don't know the exact numbers right now, but it's in this range. We're getting $550 to $650 a month in profit, and we have all of our cash back, and we can recycle this process or repeat this process over and over and over again. If we have 12 months, we can repeat this process 3 or 4 times, depending on how fast you can move and how well you know a market and how well you know what you're doing. But you can repeat this process. That's what the BRRRR strategy is here. This is where we're at repeat. But you want to make sure that you don't just use the credit cards on fun stuff, right? We're using it to build wealth and to create cash flow. So we just keep repeating this over and over. And in this scenario, what we've done is we have purchased a house using credit cards, 0% interest business credit cards. And this process, which will take about 3 months, you have now paid back the credit card, and you have to know what kind of deals to look at and have the right team to make sure that you don't lose your ass in this case. But if you know what you're doing, you're working with someone like me who knows the area, knows the process, you can move really quickly and do multiple deals just like this, okay? So this is how you buy rental properties using credit cards. Let me know in the comments if you want to see any particular videos around any more parts of this process that you want to see more details on. But I've just showed you a process, and this is what we do for our properties and for client properties. But we do the Section 8 BRRRR strategy, and we can fund the deals if you have a decent credit score using 0% interest business credit cards, and you can do multiple deals like this within a 12-month time frame. And if you're aggressive within a 12-month period, you can create $5,000 to $10,000 a month in net cash flow, in profit, by just repeating this process over and over, okay? And of course, if you have access to your own capital or you're pooling it together with friends and family members and colleagues, you can move even faster and scale even more aggressively. So if you want help with this process, with getting approved for these credit cards and going through this sequence and finding properties and renting it out to Section 8 and creating your own mini monopoly and your own rental portfolio remotely, 100% remote, I've never seen my properties. There's going to be a link in the description or the comments. And you can click on that, book a time to talk directly with me. We'll talk about your situation and see if this can work for you. But I hope you found this useful, and I'll see you in the next video.